Hello and welcome to Financial Planning for Canadian Business Owners. Today on the show, I have John Colibri, co-founder and CEO of Colibri Financial Services Agents. Colibri is a outsource treasury service for small businesses, and I brought John on the show today to talk about what that actually means. John, thanks for coming.
Thanks, Jason. Great to be here.
So, John Pelly of Colibri, tell us about what it is you do.
Well, essentially, we provide fractional treasury manager services. So then you say, well, what's that mean? So we produce significant savings for business owners and businesses in general by reviewing all of their banking fees, interest rates on accounts, as well as loan structures, merchant services processing, you name it, anything that runs through your bank account, we do an analysis on it. Compare that to market rate, what we know is available in the market, and then provide you with a summary of the savings that are available.
Okay, so let's dive into why that's necessary. I mean, you're talking about savings, so that's important. So talk to me about what the conventional relationship for a business owner and a bank looks like and why you think that's suboptimal.
Yeah. So essentially, my experience, and it's been over 35 years of banking on my side, um, a lot of business owners don't, they think they have a good relationship with the bank and that the banker tells them it's a good relationship, but essentially they're just receiving pretty well standard rates on things. um, and they don't understand, the business owner or the customer doesn't understand various things about banking. um, and they're relying on the relationship manager to give them the best possible deal. At the same time, they don't know what that deal is. So it really comes down to a point where it's very challenging to negotiate something that you don't understand.
Well, beyond that, where's the incentive for that person to give the greatest, incentive or the best option possible, right? I mean, sometimes, unfortunately, incentives may be the opposite. But even if there wasn't, if there's no incentive and it's just simply, okay, I need to get a deal done, this client needs to get something done, the incentives get the work done, right? So where is the impetus for the best possible deal to happen coming from this other than benevolence? And if a system is designed to rely on benevolence, it's going to be suboptimal.
I fully agree. Fully agree. One of the, I won't call it a challenge, one of the opportunities for business owners is to understand how the bank prices things like loans, account fees, and that sort of thing. Um, Banks rely on a very um, complicated profitability model, and each customer is run through that profitability model. So while based on your financial position, you might qualify for a loan prime, for instance, um, if the profitability model doesn't support that, um, then you're not going to get that rate, right? So they feed all of this revenue sources into it. Then they have a stated hurdle that they have to meet in order to be able to approve that pricing for a particular customer.
And that makes sense. I mean, let's not, you know, unlike most, many Canadians seem to believe, banks aren't charities, right? They're not there to do things for free. They are profit seeking, and I would say fat margin businesses in this country compared to others. So it's not surprising they want to make money, and nor should we begrudge them that. The question is, how much money are they going to make, and is that fair?
Right. So just to your point, they are not charities, although I've started to say that a lot of people are donating their money to banks
Oh yeah.
because it's just coming out of their account without any solid, without any type of um, benefit being made. Uh, my view is banks are a necessary evil, but at the same time, there's ways that you can and should reduce that amount of evil, right? So last year, to your point about profitability, last year, the big five Canadian banks, I've got to expand this analysis to the big six soon, but at this point, as of October 24, the big five banks in Canada produced a net profit per minute of $102,000. So that's, you know, every minute of the day, every day of the week, every month of the every week of the year, they're producing over $100,000 in net profit, and that's
Mhm.
after fines and everything else.
Depends on
So
how big the
it's
fine is, looking at UTD.
yeah,
Anyhow.
yeah. So, um, when you look at those numbers, a lot of people say, "Well, I'm not going to negotiate with my bank, or I'm not going to move my business from bank because I like the guy who's there, or whatever." But at the reality is, if you move your business from a bank, it's not going to impact net profit that they're racking, right?
Well, as I like to say when it comes to people comparing Canadian banks, we're just comparing basically 5 different flavors of low grade vanilla. At the end of the day, they all do something similar, and you may have a good relationship, but we've also seen, I mean, I don't know about you, I'm on my 3rd business banking rep in 6 years. These people, if they're competent, get moved out pretty quickly. And, it's,
Exactly.
you're left to the next person hoping that that person's competent, and we'll see what happens.
Yeah, you're rebuilding a relationship, every couple of years.
Yeah.
Yes, it's good that you would have a history with the bank. To your point about being low grade vanilla, I believe, yeah, their services are commodities right now. And and it's the same service. They move money from point A to point B, or they lend money. And it's the same service across all the banks. They might call it something different or paint it a different from a branding perspective. But the reality is exactly that. It's a commodity. And what happens to commodities is you should be able to drive the price down.
Well, that assumes enough competition, which we don't have much of that in this country.
Well, actually, I would disagree with that in that there is a lot of competition at the street level for deals
Hmm.
in the business banking world. Okay. And the reality is banks are tripping over themselves to try and get a deal. The way we structure this and provide the information to them, they love it because one, they don't have the relationship managers don't have to go out and seek the business opportunity. And two, it provides them with all of the information that they need, one, to make it their own opinion on the deal themselves. The vast majority of people that you're dealing with face to face at the bank have absolutely no authority.
Yeah.
They've got to move it up the line to the next approval level, to the next approval level. And in order to do that, you have to make it as easy as possible by providing them the right information. And some of that is market information. Is there another bank down the street that's quite willing to do
Mm.
this deal? And guaranteed there will be. There will be. It's just for the average person, it would take a lot of work to pull that information together and to get the information needed from additional banks.
Yeah, and to go back to your moving up the line conversation, the reality is it depends on the size, right? So like if you're a major publicly traded corporation, they're bending over backwards, you're probably have multiple relationships going on. It's, they have people full time doing this work, and you have people at these banks dedicated to your account. Whereas as you move down the line and you go down to standard commercial banking, you still get people who are going to look at your business and actually understand your business when coming to you back to products. But when you get to small business banking, you're on a checkbox system, and it's
Exactly.
utterly infuriating because if you don't hit every box on that checklist, even if you have the craziest, wildest, like awesome growing business that needs help with banking, sorry, we can't do anything for you because you're below a certain threshold.
Yep. Exactly. Or you don't tick this box, or we're not interested in that type of business this quarter, but maybe next quarter
Or
our sales totals could change and we might be interested in that.
exactly. Okay, so let's talk about what an engagement with you looks like. Business comes to you and says, "John, help me out here. What can you do for me? I need to have a better relationship and access to financing and account services."
So there's a couple of different things. Let's look at just the account fees and loan pricing, for instance, and then we'll talk about the funds or raising capital um, as part B. So on the fee side, a lot of businesses or a lot of organizations would call it a treasury services review. The important thing is your banker may tell you, hey, we want to come in and do a treasury service review. But essentially all they're doing is reviewing the services that they're providing you currently and saying, yeah, you got it. You got a good deal by our standards. And there's no more services that we can sell to you right now. Um, So what we do is we take we'll start with the business owner, um, and then look at try and determine, what their purpose is. Are they looking to save money? Do they just, I've had clients come to us and just say, look, I've had it with my bank. I need to go somewhere else. Find me a bank. But let's take the case where it's like, okay, well, let's just review and see what kind of money you can save us. So we'll look at their financial statements. We'll do our analysis on 3 years of financial statements, and then we'll typically ask for 3 months of bank statements, and 3 months of merchant services statements if they want to go that deep. So I mean, you've heard the phrase that a company's financial statement is like a snapshot of their financial position on a given day. I take that a step further. We look at the snapshot, but then we look at their bank account statement, and I look at that and it's more like a video. It shows us exactly what's flowing in and flowing out of that account every day. And so, we'll look at the bank statements and do our analysis around that. Based on the information we glean from those couple of reports, we'll do a pretty quick analysis to say, we think we can save you X number of dollars. Is this a reasonable amount for us to engage with? But also, is it a reasonable amount for the company to say, yes, we would like to save that amount of money. What do we need to do next? So, so that's the starting point, and we've tiered it in a couple different ways. So we can, then we'll move into accounts receivable, accounts payable analysis, and that sort of thing. All the while, just trying to turn over the rocks and find ways for this company to save money. If you look at a company, every dollar of revenue that flows through a company has to hit the bank account at some point. Every dollar they disperse has to hit the bank account at some point. Every one of those transactions, whether it's based on a dollar amount or the transaction itself, attracts a fee. So you don't want to reduce the amount of money you're putting through your account. You want to reduce the fee that's attached to that account. And the only way to do that is to provide the bank with competitive information that says, yeah, we can get this at a better price somewhere else. So let's start looking at it. So essentially, once we've done our review, and it's important to note as well that we're independent. We're not engaged with any particular bank. We go out to all the banks. We have contacts at all the banks, and we just find the best possible deal. Right? We don't get anything. We don't get any form of payment from the banks at all. And so the next thing is okay. What about loans on interest rates? We'll look at that again based on the financial position of the company, what's available in the market, and also what we know is possible based on experience. So um, once we do that review and the client says, yeah, this is interesting, we would like to do that, we'll write up a detailed report and we'll provide that to our various banking contacts. At this point, we keep it anonymous. We don't tell the banker who the company is until they've shown interest. And then as they send us back proposals, we'll analyze all those proposals, stake them out, rank them 1 to 5, 1 to 6, whatever it's going to be, and then come back with recommendations to the business based on that information. So the decision is always still with the business owner or the business contact. We don't make the decisions for them. We just present them the information, give them a recommendation based on our experience. But for the most part, it's still their decision. They just haven't had to do the work to get to that. Secondly, if they want to look at funding, whether it's for equity strips or expansion, or they're just tight on cash, whatever reason, we'll look at that in a little different way. But the same sort of thing. We'll gather all the information. We present it to our banking network, and ask for proposals. Last proposals come back to the client with the options that would best suit them. On In both cases, our fee is based on what we generate for the client, whether it's on the funds or on the savings. It's not a flat fee by any means. And so the client is always paying us out of money that they've actually saved. Right.
Okay. So we'll get into the compensation in a second, but so the question becomes like, okay, you're doing this at one moment in time to basically kind of audit everything, optimize it, provide better options. How often is this process, should this process be revisited?
Uh, my recommendation is it should be done on a 3-year basis, right? no less than three, no more than five. Mm, And the reason being is you want to have some time with a particular bank to generate that relationship, whatever that's going to look like. Um, and but also if your company's position changes right, every every year, and so you want to. But again, it's work to do this for a lot of people. So I wouldn't do it on an annual basis unless, of course, your relationship with the bank and is very, very bad.
Yeah, and it's work to change also. Like, let's not kid ourselves. It's a distraction from our underlying business to basically make these moves.
Yeah, that there is some work involved. Now, we also undertake with our clients, we'll project manage the changeover for them as well as part of our service. And having done that from the banker side for many years with large corporates, um, I've got lots of experience in doing that and making sure we check all the boxes and keep everybody in line to keep to the deadline. So it can be work, mm, but it's manageable for sure.
Yeah. So, okay, talk to me about the size of business that you typically deal with. Like, how big should a business be before they start turning to you for help?
Sure. I mean, we've run the gamut from companies that have $1 million in sales up to 800 million.
Mm,
So typically for us, mm, we would generally say business that has sales over $2 million is where we would want to start, and that's where we can start to see some savings. There's some sweet spots in there. It seems like where there's gaps in the banking coverage, or just the company has grown and they went from $1 million in sales to 2 million to 5 million, sort of thing. Um, and then there's other priorities that they've been focused on short. And sadly, the banking side hardly ever becomes one of those priorities until it's a problem. Right?
mhm. Okay. So, all right, and then let's go into compensation. How is it you're compensated?
Sure. So typically we will look at um, the savings that we generate for the client when it comes to the treasury review side of things, when fees and rates and that sort of stuff. We'll look at that and we'll estimate the savings for that, and we'll charge a fee based on those savings. So the fee ranges from 12 to 18%, depending on the amount of work that's involved and how long they want to engage us. I've had clients who just said, "Oh, just give me the report. I'll take that to my banker and run with it from there." To people who say, "No, no, need you to project manage this from start to finish." Um, and so, we look at the estimated savings for 3 years, and then determine the rates based on that scale.
Okay. All right.
Now,
So,
if on the funding side, sorry,
yeah.
on the funding side, if somebody comes to us and say, "I need a $5 million loan," then we have a sliding scale that we use for that as well. The Lehman model is basically what we use, to determine compensation for that.
Fair enough. But nevertheless, they are ending up net positive for the effort.
Absolutely, absolutely.
So, I mean, that's for companies that you said north of a million in sales. Is there any advice you have for businesses who are starting out or below that threshold who can't, where it's not a fit for your services? What should they be looking to do when engaging with the bank in terms of making sure they're optimizing their experience there?
Yeah, good question. I'll tell you what we did as a company when we formed 6 years ago now. We made the decision, and both myself and my partner, who's actually my son as well. We both worked with the same bank for a period of time. I had 35 years in, he had 5. And we both agreed that we weren't going to default to just say, well, let's just go to that bank and get their services. So we actually went to the 5 banks represented in our neighborhood here, and sat with a small business advisor in all cases. Um, the and asked for the information, all that sort of thing. The changes in levels of service, level of commitment, and pricing levels were unbelievable when we did our analysis. It was just amazing. Um, and so that's the first thing is you want to go talk to various bankers. Just don't default to, well, that's the bank that my parents used and I used, and I'm going to do it. Um,
There is no loyalty in banking. Let's be honest. At the
There
end of the
there
day,
shouldn't be any more.
yeah,
If you're loyal, you're paying a price for that
yes.
loyalty. right.
And the thing is that loyalty, unfortunately, that loyalty when you need it most is not there because the old saying, was it the old saying, if you want a bank to give you an egg, you need to give them a chicken first, right? So when you, when things are tough, they're not going to bend over backwards. They're about their own safety.
Yes, exactly, exactly. So the loyalty there doesn't go both ways, right? For sure. And I've seen that, uh,
I
having
mean,
worn both hats
I'm
from
often surprised that people think that there is something there and they're like, well, I've been a loyal customer for 20 years. And my response is, so what? Like, they don't care, right?
yeah,
Like they're a profit-seeking enterprise that moves people out of that chair every 3 months. They'll replace you with the other person who's leaving their bank for being annoyed by the same things, right? It's just the way it is.
yeah, exactly. And sadly, most bankers don't get compensated for customer retention
No.
on an individual basis. They may get compensated based on their portfolio, but only if it's growing.
Mm,
So it's always about the new business coming in, and what can I do to make my life easier on a daily basis, right?
excellent. So bottom line is if you're starting from zero, don't take it for granted. Shop around, be competitive, do a little bit of hustle. It will save you time and it will save you money, especially in the early years when money is fuel, right? So don't
Exactly, exactly. We did the analysis. I actually built a calculator for the fees across the different banks, and we still use it today. But we saved ourselves, I think at the time it was about $200 a month in account fees from the top bank to the bottom bank, right?
nowhere near unsubstantial. It's a valuable sum. Okay, so
And you take that, that's just in year one. You take
yeah,
that and multiply it out by however many years you're going to be in business, and that's
it,
sizable.
it adds up. It adds up a lot, quite honestly. Okay, so before we wrap up, any kind of final parting thoughts on words of advice to give the average business owner?
Yeah, I think I got three key takeaways I'd like to present. One is, it's challenging to negotiate what you don't understand. So first of all, find a way to understand it. As Peter Drucker was fond of saying, do what you do best as a business owner and then outsource the rest. So if you can't understand it yourself or you don't understand it, you don't have the time, it's, it's not in, it should be important, but it may not be important given everything else that got on the go, then have somebody do it on your behalf for you, right? The other thing is to appreciate and understand how competitive banking is, right? From door to door. As we said, the colors change, but the services are the same. Um, so you need to leverage that competitiveness. I've actually seen competition within bank departments for customers at different times, right? So understand that, leverage it as best you can. Um, the other the other point is the people that you're dealing with have no authority. So they're nice to your face and everything else. Yes, that's their job, get you in the door, talk to you, but they can't make the decision that you need them to make, right? And so as a result of that, you need to make it as easy as possible to move it up the line to get the approvals that you want. And the only way to do that is to have the information presented in a proper way. It's one thing to ask for a better deal. It's another thing to ask for a better deal the right way. And that's all information based. So that's my big three, for anybody who wants to talk about and look at banking, whether they're a small business or medium sized business. Like I say, we've done deals for large corporations as well, um, and our track record for savings has been excellent.
Excellent. And where can people find you?
Sure, they can find me. Easy to find me on LinkedIn, or you'll find us at John Colibri FSA.com, COLIBRI FSA.com. The web page is the same as that. Or you can give me a call, 902-483-2342.
Right. So that was John's pitch for why you need Treasury outsourced services as a small business, and I think it was a great one. So, as always, if you enjoyed this podcast, please leave a review on your podcast outlet, and if you're watching on YouTube, please like and subscribe. Until next time, take care.
Thanks.
Thank you.